If someone in Pakistan was actually mining Ethereum or Bitcoin 5, 10 years ago, they would have enough supply of oil and gold to actually spend on this network as much as they please and build applications and do whatever they like. You can get started with very little amounts of money and then scale that because you don't have enough capital expense to actually set up the network. There's already a decentralized worldwide network that exists that you can leverage.
So what are the policy level measures that a country like Pakistan needs to implement? Because as of now, you're not even allowed to legally trade Bitcoin or buy Bitcoin in Pakistan or any other crypto for that matter.
Well, I think that's part of the reason is because they think that their ecosystem is so fragile that if there's any departure of any kinds of capital from within their economy,
Yeah.
it's going to absolutely handicap the economy. But what they're completely missing out on the other side is the boost that that economy is going to gain from adopting these kinds of digital modes of transaction. If I could custody my own money, even in PKR, even if you wanted to create a PKR coin, right? That's still perfectly fine. That allows these people to not be stuffing their mattresses and be at a risk of robbery or at a risk of fraud and Ponzi schemes, right? Where right now there's even, and it's kind of sad to admit, even someone in my extended family got done by a Ponzi scheme recently in Pakistan.
Do you think Pakistan at its current stage of evolution has the right level of digital infrastructure that it can adopt this technology?
Absolutely. Everyone's got a mobile phone. That's all we need. Pakistan would be doing most of its transactions as layer 2, right? Ethereum is more so layer 1, where you've got other cheaper layer 2s that sit on top of Ethereum that get settled with Ethereum. It's almost like, think of it as two different layers, but this is the cheap layer to transact on for smaller transaction sizes. And they get rolled into Ethereum on a 24-hour, 10-hour, 1-hour basis, right? And those transactions cost less than a cent, right? So those would actually be cheaper for Pakistanis to do than what they're doing today with Easy Pesa. Price and kind of achieve a similar multiplier. I assume safely Bitcoin would go to anywhere between 120. That would be the normal value of Bitcoin during a bull run. It's going to fluctuate around that. It's going to go euphoric, maybe close to 160 to 190, right? But at that point, you should be scaling out. Now that the halving is going to happen, it's between $44,000 to $50,000 for the fair market value of Bitcoin. But every single halving previously, the fair market value of Bitcoin has been eclipsed by anywhere between 1.8 to 3x.
Hello, everyone. My name is Nauraiz Rana, and I'm an economist with the World Bank. I'll be hosting today's program on New Wave. And actually, during the course of this program, I'll be talking about something very interesting, which is for a change beyond my wheelhouse and area of expertise. We tend to cover a lot of issues about Pakistan's economy, about the global economic issues in the traditional sense. But today I want to talk about something which is in some way related, but not so much. That is the blockchain, the crypto, the Bitcoin landscape, which a lot of traditional economists like me are wary of, and they don't really truly understand what that means. So for this discussion, I have someone really special today who's a tech expert. And I'd like to introduce and welcome Ubair Javed, who has been an award-winning avionics engineer. He's spent a decade in avionics developing global satellite networks. And since 2012, has also been quite heavily involved in Bitcoin and related technology landscape. And most recently, he launched his company called Nomics, which is one of the pioneers in tokenizing real assets. I hope I got all this right, Ubair, because for me, it sounds very alien. So with that, welcome to the program, and please let me know if I got that all right.
Yeah, you got that all right. Thank you, and really, really glad to be here, guys. Excited to talk to you and enlighten people about something that seems to elude a lot of people, whereas it's sometimes just been overinflated to a point. It's actually quite simple to understand. So
I hope I'm really hoping that you make it simple for us, and by the end of this program, we'll go back with taking so much more than what we already know. So usually I tend to set the stage whenever I'm hosting such programs, but honestly, like full disclosure, I don't really know how to set the stage here. So I'm gonna let you take the lead. So I'm gonna throw you some big questions right away, starting from the big one, the basic one. What exactly is Bitcoin and what is the technology behind it? Like, less than a decade and a half ago, it was something that was valued at less than $1, something in cents. And right now it has been trading somewhere close to 70,000 US dollars. I
Correct.
mean, that is quite unprecedented if you look at the trajectory and the amount of value it has been able to accumulate over the course of the last 14 odd years. So is it here to stay? How tangible is it? How does it really derive its value from? So these are all these questions.
Right.
And let's hear it from you first.
Right. So before I get into the nitty-gritty stuff about where it derives its value from and whether it's here to stay and what caused the exponential growth in the last decade, even recently where it's gone from 20 grand to about 70 in the course of the last 360 days. But first, let me start with the broader aspect of what blockchain technology is and what it means at its core, right? A blockchain is, in essence, a decentralized digital ledger that records transactions across many computers in a secure and transparent manner, right? Now, what does that mean? Think of it as a giant public spreadsheet that everyone can see, that everyone can verify, but no one can actually alter the existing rows that have already been appended to the spreadsheet. So it's an append-only ledger, right? If someone tries to change one of the rows that have already occurred, that transaction is simply deemed invalid, right? I won't get into the technical aspects of it, but think of it as an append-only global Google Sheets that acts as a public ledger for everyone. And it allows people to transact without the requirement of a centralized trusted authority. What do I mean by that? Today, when you go to a shop and you swipe your Visa debit card or your credit card or you wire someone money, right? It actually goes back to your centralized bank DB. And that bank actually checks whether you've got enough funds or enough capital in your account to make a transfer to another bank. And then the two banks settle their ledgers between each other. And then there's a further settlement of ledgers intra-bank to actually update your credit balance there. All of this is accomplished by code on blockchain. That's in effect it, right? The reason why Bitcoin was originally created was to give people a way to transact in a peer-to-peer manner without being reliant on centralized entities. And Satoshi actually derived his initial, what's the term I'm looking for? Initial inspiration or initial motivation for actually creating this blockchain technology after the GFC in 2008, right? So blockchain technology has a lot more applications beyond just cryptocurrencies, right? When we talk about cryptocurrencies, you're almost talking like, if you remember MSN Messenger or AOL, you're talking about internet as that, right? It's not quite, internet today isn't quite this just Yahoo and MSN Messenger, right? So at its core, it's just a highly secure, transparent, resistance to tampering or censorship. So your money is your money and you can transact when and with whom you choose.
So there's no one particular entity that can manipulate it. They can actually, impress upon it in various ways, in various manners, and that's why I think a lot of people have been going towards it, that they feel that there is no big regulator like the government in which people have been losing trust, especially as we've seen post the pandemic, due to supply chain disruptions, there have been like unprecedented levels of inflation everywhere in developing parts of the world, as well as in countries like the US and the UK. So, does it address those issues as well? But on the flip side, is it good to not have a regulator? What does that really imply?
So it's not saying there's no regulator. The regulator in this case is code, right?
Okay.
So there has been certain parameters of this Bitcoin economy that have been encoded in code since its inception. Like I said, it's append only. Once that code is created, it cannot be modified or changed or tweaked by anyone, right? So even Satoshi himself can't actually change the total supply of Bitcoin from 21 million to 30 million. What is the fundamental problem as an economist? What is the fundamental problem with fiat currency? Why do we keep depreciating the value? Why does my spending power keep going down every year?
I mean, because you can build as many as you want whenever you deem possible. Originally, a couple of years, decades ago, it was backed by gold, but now that phenomenon no longer stands. Right. So it's at the will and the whim of the government, Right.
So when we got taken off the gold standard in the 80s, I think, was it 70s or 80s?
Yeah.
Ever since that, it's backed by the US dollar, for example, is backed by the trust and security of the US government, whatever that means, right? Same thing with the with more volatile currencies like Venezuela or the Pakistani rupee, even, it's backed by the trust and security of those respective governments. Therefore, they're a bit more volatile. With Bitcoin, its total supply is always going to be 21 million. No one can fundamentally change it. So once you've created a cap on the supply, if the market cap of an economy increases, the value of each single denomination for that economy should also increase, right? Like if the US economy was actually improving, which it has been over the last decade, and if we weren't printing US dollars, where we introduced about 50 or 60% of the supply in the last 3 years, the US dollar would have appreciated against the other currency or basket of goods that we're importing into the country. This isn't the case because people keep printing more money. Bitcoin offers a stable amount, finite amount of total Bitcoins that will ever exist, which is 21 million. Out of those 21 million, about 5 of them are deemed to be lost or are housed by Satoshi. So technically, you've only got 17 million Bitcoin in circulating supply. Now, initially, Bitcoin started off for nefarious purposes where people thought it was untraceable and untrackable. That's really not the case. It's pseudo privacy, right? You can still track it when someone onboards or offboards into the fiat ecosystem. But as more and more financial institutions or even sovereign governments and sovereign wealth funds like the El Salvador jumped on, like Fidelity has been mining Bitcoin since 2013, right? So as more and more of these financial institutions jump on and they prescribe a value to Bitcoin to facilitate transactions between them and between government agencies, that's slowly built more and more trust in Bitcoin, right? Now, coming down to why the price of Bitcoin goes absolutely nuts every 4 years. Everyone might think it's some sort of black magic or there's some nefarious economies at play in the background. But like I said, it's actually really, really simple to understand. The day that Bitcoin was created, Bitcoin was, let's say for rough math, issuing 100 Bitcoin every day, right? So every single day, in order to reward individuals for supporting this network, for giving computational power to this network that is facilitating transactions between peers, it would reward those miners or hosts 100 Bitcoin per day between them. Every 4 years, that value goes down by 50%. So after 2012, it went down to 50 Bitcoin. After 2017, it went down to 25 Bitcoin. Then in 2020, it went down to 12.5 Bitcoin. Now it's gone down to 6. Well, the actual number is about 3.5 Bitcoin per block reward. But every 4 years, you're introducing a massive supply shock to the market where the total amount of currency entering the ecosystem is slashed by half. At the same time, because the price is increasing, the media cycle picks it up, and there is a surge in demand while there's a supply shock, which is economics 101, basically.
So
demand and supply curve.
Yeah, so those are like basic economic fundamentals. So even if you assume that the demand's constant, it's not increasing, but you slash the supply by half, and in this case, what they're doing is that the amount of Bitcoins that the miners have the ability to mine, that's reduced by 50% at every 4-year interval. And that means that after the 4-year mark, the price goes up. But even within the duration of those 4 years, even if you look within that cyclical period, we see there's a lot of volatility. Sometimes it just jumps up, sometimes it drops down. And whenever it's dropping down and the pace at which it's dropping down, the people who are skeptic and fearful of the fact that it might just evaporate in thin air. Is that a possibility ever?
So that's actually a really, really good point for us to segue into how this currency actually derives its value, right? Yeah. The way that Bitcoin or Ethereum derives its value is slightly different. And I'll kind of get into that a little bit more. Bitcoin can be considered digital gold, right? It has value because we stated it has value. Sure, it has some applications here and there, like gold is a great conductor, right? Similarly, Bitcoin is great for cross-border remittance or privacy-based transactions. But Ethereum is like the oil. Ethereum is like the resource that actually powers the digital economy in a very similar fashion to how oil powers our industrial economy, right? So Bitcoin is a store of value, whereas Ethereum is barrels of oil that are consumed to create applications on the blockchain that allow companies like mine to operate, that allow businesses to actually utilize blockchain for their everyday uses, which, and I can get into the benefits of them a little bit later. So fundamentally, even though they're both commodities, and even though they can both be considered investments, they're two very different class of investments.
So the use cases are different, precisely.
Yes.
Okay. And like, does Ethereum follow a similar halving structure as Bitcoin, or it's different?
Yes, it used to. They've shifted from proof of work to proof of stake. Now to get into how it derives its value. So for Bitcoin to derive its value, like I said, right now when you transact on a bank's network or Visa's or MasterCard or Amex's network, it's because Amex and Visa and MasterCard have actually gone out globally, built out a global network of servers all over the world and point of sale solutions that allow merchants to, swipe your card and take out money from your account and pay the merchant. Imagine if Visa, when they were entering a new economy, let's say American Express isn't in Pakistan, they want to come to Pakistan, and they say, hey, look, instead of American Express going out and setting up our servers and going to businesses and giving them our point of sale, why don't Nauraiz, you or Ubair go around and sell these companies or hook them up with a point of sale and set up the servers, and every time an Amex card is swiped there, we'll give you a part of our transaction. Right. So it's almost a revenue share model to facilitate, to allow the little guy to participate in something that was previously the domain of multi-trillion-dollar multinational conglomerates.
All right. So they're kind of bringing various stakeholders within their umbrella, and they're giving them some sort of kind of branching it out through other instruments.
And that's what you refer to as miners. Miners are in effect just individuals that have dedicated computational resource to the blockchain network, to the Bitcoin network, or to the Ethereum network, and they're consistently monitoring new transactions. They're validating those transactions and creating that new row, right? That new append-only row, and they're verifying that the new row actually syncs up with all the previous rows, that there's no hanky-panky or funny business going around there, and that for that they're awarded a percentage of. Not the percentage of they're tipped a percentage of the transaction, because you can actually tip someone just like a bouncer to get in front of the line at a restaurant. But there's also a block reward that's issued by the network itself to facilitate the growth of the network. Now, this block reward is what I was telling you depreciates every 4 years. And eventually by 2080 or 2090, in the next 70 or 80 years, there's going to be no more Bitcoin left to mine, right? There's only 1.5 million Bitcoin out of the 21 million Bitcoin that is yet remaining to be mined. After that, the network is just going to operate on, well, there's 100 different options and opinions of how the network should develop. By then, they're assuming that the price of Bitcoin will be so ridiculous that just the tips will do. So yeah, that's where Bitcoin derives its value from, the computational power of the network that actually supports facilitates all these transactions.
And now, there's no way, and there's no way that this network can be undone by.
It can be, but here's the thing: you're going to spend hundreds of billions of dollars attacking this network today. It was easy to do the day it came out because there were like 2 machines total mining it. Then there were 50 machines mining it. Then there were 100. Now there's hundreds of millions of machines independently set up. One that's just sitting in my garage right now, right? That facilitates these transactions. Even if all of them went down and one was operational, you're still good, right? That's from a disaster mitigation standpoint. It'll be slow as hell, but it'll still work. From the other standpoint, it still won't be slower than bank settlements, which is T+2 settlements. This is still within a few minutes or hours. Now, if you were to attack this network, you're going to be spending billions of dollars per minute or per hour. I can get you the exact figures in a bit, to attack the network. Now, the only case you would actually want to do that is if you're an anarchist and you just want to see the world burn. Because you just spend 50 billion attacking the Bitcoin network, or 500 billion, because it might break in the next 5 minutes. It might not break for the next 50 hours. We don't know, right? So you're spending a significant amount of dollars attacking the network by actually buying 51% of the network hash rate. So if there's 100 million miners out there right now, you've got to go out and buy 51 million devices to take over the network. Now, there's chip shortages. It's fundamentally impossible. It's literally impossible to get a miner without paying a 2x premium during a bull run.
I just want to throw in a very layman question, so that, don't bother me asking. When Bitcoin mining was happening and still happens and is happening everywhere around the world, it said that it's unsustainable because of the fact that the print it has on the environmental imprint, as well as the amount of energy that it consumes and it burns to mine one Bitcoin. How truthful is that statement?
That's actually quite false and egregious, because it's the press that actually comes up with that statement, which is to assassinate Bitcoin standing with ESG compliance. In reality, if you look at any major mining operations, they all occur near hydroelectric dams, they all occur near solar farms, they all occur near renewable sources of energy. And fundamentally, because again, it's economics 101, you want to reduce your overheads whenever you're producing anything. You'd be stupid to go to New York and start mining Bitcoin. That's really, really stupid, right? Cost of electricity is super high. Large Bitcoin installations always try to go where there's a lot of cheap power. The number one state for that is Philadelphia. Lots of mines, 4 cents per kilowatt hours on peak and lower than that in off peak. Why is power so cheap there? Because they're generating that and pouring it out. They don't have the storage capability for it anyways. So we were going to literally pour this energy out regardless, right? It's actually a load on our network. So if someone is actually consuming this energy, it's actually better for our energy grid system.
All right. So now let's talk about how Ethereum derives its value from, because I don't want to change your train of thought. But
right.
But do remind me that I also want to ask you that can countries like Pakistan, for instance, can they capitalize on this opportunity to mine Bitcoin? So, but we'll come to this later.
We'll come to that afterwards. But first, let me finish my earlier thought. So if you're going to want to attack the Bitcoin network, you're spent about 100 billion in devices, and then you're burning $50 billion per hour trying to assassinate it. What happens if you actually compromise the network? Bitcoin loses all value. You lost $150 billion by attacking something. Wouldn't you rather just add that power to the network and make your $100 billion over the next year, and then continue to make another $100 billion every year for the next 4 years? You just 4x your money. So the incentives are in place.
Yeah.
Any logical person, even if they wanted to attack the network, they might be like, actually, it's actually more cost effective and beneficial to me in the long run to mine Bitcoin than to attack the network and try and steal.
And again, another thing that a lot of people, like people who don't really understand the technology behind how this works and the fundamentals behind that, are wary of headlines which make their way talking about the US Fed is going to kind of make its regulations much more stringent on the use of Bitcoin and on the trading of Bitcoin and Ethereum. Do these governments have the authority and the power to somewhat execute or influence the control over how it works?
So US government, no. Other governments, and I'll get to China in a little bit, and more authoritarian regimes, including the one in Pakistan. But when you actually go to the US regime, they've actually declared Bitcoin and Ethereum as commodities, right? Mm-hmm. I've personally been in the room with Michelle Pham, who's the Commissioner of Commodities and Trades. And we asked her the question exactly this, like, why are we stifling innovation by regulation, by enforcement in the United States when this is the hub of everything blockchain? And she gave a very diplomatic answer, which I'm like, okay, that kind of makes sense, but it's a very diplomatic answer. Then she took a deep sigh and she's like, or we just need to flip the calendar on Washington a couple of times and everything's going to be fine. Right. So it's legislated by people that don't understand. Right. And as more and more institutions adopted, especially the world's largest financial institute, BlackRock, it's here to stay. They don't do anything without actually planning 100 years ahead. And they're already lobbying or place tactical and strategic lobbying interests in the right departments where it's not going to affect them anymore.
And now they also have like crypto ETFs, right? That they've been
Bitcoin ETFs. Been mandated, actually, it's shattered records for all other ETFs in the world, right? Like it had flow of billions of dollars within the first couple of weeks, which is obscene. Like unprecedented amount of volume flowed into those ETFs over the last month compared to any other ETF in the world.
Yeah. Oh, fair enough.
Moving to how Ethereum actually derives it. So Ethereum derives its value the more unique wallets or unique users are on chain, which are actually utilizing the Ethereum infrastructure to build decentralized applications. Think of Ethereum as the iOS App Store, right? Instead of signing up with Apple, creating you're now an approved developer, then submitting your application to Apple to actually develop it, it's closer to the Google Store, where it's like anyone can actually sign up and publish an app on the Google Store and charge whatever for it. But right now, Google bills for the total amount, and they give you a cut of whatever they think you deserve at that point in time. So again, it's a central entity that controls it. The Ethereum network is different. The Ethereum network has said, we're going to provide you the fundamental network, and we're going to charge you computation amount for each action you're performing in our network. And applications are fundamentally a bunch of if, when, then, or more complex algorithms that are just tagged together to create a more holistic application, right? So Ethereum network said, I'm going to charge you X ETH for this action, X ETH for Y action, and X ETH for Z action, right? And this is a fraction of an Ethereum for each one of these actions. The more people that are actually consuming the network, the price of oil goes up or down, right? So the more transactions you have on the network at any point in time, the value of gas actually goes up. And it's actually called gas price, right? So the analogy to oil is very similar.
So the more the people start leveraging the technology behind Ethereum, or the Ethereum technology, the higher its value is going to go in.
Correct.
Right.
The higher the price of gas is, right?
Yeah.
And the gas values, just think of it as the price per liter or price per action, right? But then there's the price of the crude oil barrel itself, right? That appreciates because there's a huge demand for crude oil now, right? Whether it's kerosene, whether it's gasoline, whether it's natural gas, doesn't matter. The crude oil price will rise because there's a demand for all of its,
So are there like a lot of use cases or like prospective areas where, the demand may pop up from, with respect to the use of Ethereum?
Financial institutions, right? Fundamentally, like cryptocurrency was made for financial institutions because it gets rid of T+2 settlements. It gets rid, because settlements are instantaneous. It gets rid of counterparty risk, which is a huge deal for bank, right? It gets rid of money laundering and audit because you're actually doing audit trails baked into the system instead of paying E&Y 300 grand once every quarter to come in and look at your books and make sure no sanctioned parties got pulled in, right? So it automates in code a lot of functionality that financial institutions spend millions of dollars building and maintaining. And if you actually go back, they actually had to hire a bunch of Fortran and COBOL developers because these were all old guys that retired. So the green screen banking system, right? Even up to 3 years ago, there was a big demand because they're trying to shift over to newer tech stack, but no one understands the old code anymore, right? So they were paying through the nose for these guys to come back to work. But this already provides them a decentralized distributed network. They can choose to operate on the public ledger, or they can create semi-private networks where they can permission parties to operate on it. And that's where I see a lot of the use cases come in right now. And that's where my company's focused as well, which is creating what was the problem with blockchain previously. It's all a scam. We don't know who's who. People hacked my wallet. People scammed my money. People launched unregulated securities and just did a rug pull on everyone. What if you actually baked in a digital identity that goes alongside with everyone? And this digital identity isn't just for use on the blockchain, but this digital identity is your digital driver's license. It's your digital passport, right? Why do I have to carry a driver's license in 2024? It's a stupid piece of plastic that I have to have on me, and I might get into trouble, or I can't go through an airport if I don't have it with me. It's stupid in 2024. It doesn't make sense, right? If you have decentralized identity that is censor-proof, or even a centralized identity that's issued by DMV. In fact, one of the reasons I moved to Utah is Utah was one of the first states to start issuing marriage licenses on chain, right? So now I don't have to go and wait at the registrar's office, pay them $100 to view my marriage certificate, right? Same thing with titles, deeds, things like that, things that are completely opaque and obfuscated by design, almost. So you have to go and pay MLS or Patwaris in Pakistan. So that, oh, yeah, we'll get you the title, and no, there's no liens on it. And then later, once you paid the money, oh yeah, there were liens on it. All those problems go away if everything is maintained on a centralized ledger that all parties that have access to it can view.
So rather than people being scared of being defrauded, as as one of the downfalls of this technology, on the flip side, is actually helping people, circumvent and avoid situations in which they're likely to be defrauded. Like you
Right.
mentioned, in case of land deeds, you don't know how many owners they end up with 20 years down the line. So it's basically packing them up. And the more financial institutions and all these use cases are migrated on the technology, then I'm assuming it's unlikely for them to unmigrate and
No,
move back.
it's like pulling out your pipes. You're not going to pull out your pipes in the house. It's going to rip your foundations out, right? And then the other item, as more financial institutions continue to adopt it, think of it like the email, right? When email first started off, you had to type someone's IP address, then their subnet, then their server address to send an email. You didn't get many emails, right? Then when we transitioned to seamless integration, which is okay, I just need to type in my email address. Then we moved into the Web 2 world where, okay, I can use my Google email to access 500 other ecosystems without having to independently go and sign up for each one of them. Who wins in this? Google does, right? Facebook does, Apple does. They now have a complete persona of your identity that they can target and market in whatever way they see fit. Facebook actually recently traded all your personal Facebook Messenger messages to Netflix, and they did a swap of data, which is, okay, if someone is messaging about babies, they probably have kid TV shows that they watch on Netflix. So let's start advertising Netflix kids to them, right? So these organizations will send sell your data in a heartbeat, right? You are the product there. What blockchain introduces is zero-party data, where I have control over where my identities share, and I can revoke access to my identity at any time I see fit. Now, some people might say, well, we have regulation in place to allow you to do that. But bullshit, right? Like, if you look at Cambridge Analytica, look at the amount of effort that guy had to go through. He actually had to go from the United States to England, file under the EU DARPA, Data Regulation and Protection, DRP. I can't remember what the terminology for that was. He had to file under that EU data protection law to finally get his own data from his voter rights to see if he was manipulated during an election that is contested to be potentially influenced by outside parties. So if I had my digital identity on chain, I could view every single person that's viewing it, every single person sold it to, and revoke access and actually sue them if they breach their terms. It creates zero-party data. Whereas right now, all data that exists is third-party data.
So it kind of addresses a lot of the issues, the privacy issues, the confidentiality issues that the world is facing and they're grappling with, and all these legislations around, what's happening even in the EU and then in the US. And just recently, I guess, was it Google? Yeah, Google Google promised that it won't be tapping into people's incognito mode. Exactly.
Yeah, but they're using something else now. They're using Google search engine optimization, which is slightly different. It's AI based. They did it because they know they're ahead of the curve, and they're the ones that are going to come out winning from it, right? And with this kind of decentralized identity, the other benefit that you actually end up gaining is you're reducing the amount of attack vectors where your personalized information can be leaked. Because when you're actually showing someone your data, I'm not actually having to go and upload my driver's license everywhere. I've uploaded my driver's license once. I created my digital identity, and now I can log into 500 different places with that digital identity. So if any of those 500 places are compromised, it's fine. This server just told them I had the right information, and my date of birth and my license match the name that I provided them, right? They don't actually get to store my driver's license photos or anything along those lines.
Yeah. All right. Super interesting. And a lot of very captivating information, to be honest. So, I mean, we understand where the use cases are, where it's deriving its value from, and from what it seems, I assume it's not going anywhere. I think more than assume, actually, I would like to believe that at least these two modes of technologies aren't going anywhere. But then, if we talk about how can countries like Pakistan, for example, just want to zoom into a particular country, a developing nation, which is grappling with various infrastructural issues. How can it leverage this technology? Because, in our world, in economic development, we use the term leapfrog development. You go through phases of development that countries missed. They weren't part of the industrial revolution. Then, they weren't part of the tech revolution, to say so, in commensurate with the Western world. But then now we have Web3, we have blockchain, we have crypto. Are these countries at a position where they can leverage these technologies, or they lack in infrastructure? They don't have the tools to really make the most of it or optimize it in the best possible manner?
Actually, I think it's the inverse, because blockchain really was created to democratize access, right? So if someone in Pakistan was actually mining Ethereum or Bitcoin 5-10 years ago, they would have enough supply of oil and gold to actually spend on this network as much as they please and build applications and do whatever they like. On another level, because this decentralized network now exists, it's allowing smaller startups to actually break into fintech, like my company,
Yeah.
because I don't have to go out and build this infrastructure before I start working on my business, right? So by that analogy, same thing to Pakistan or Pakistani startups or entrepreneurs in Pakistan, you can get started with very little amounts of money and then scale that, because you don't have enough capital expense to actually set up the network. There's already a decentralized worldwide network that exists that you can leverage, right? Now, the biggest use case that I've seen adopted at a country level, right, was El Salvador. They're the best example, right? They had ridiculous crime. I was actually there with them when I was working in the aviation industry. You have to get guards, right? Because they actually stormed the Sheraton Hotel and kidnapped a bunch of people. Crime was horrible there, right? And they've now cleaned up all the crime. They've completely killed their inflation. People are actually making good money. Their sovereign wealth fund is up a couple $2 billion because they bought a bunch of Bitcoin instead of holding US dollars or holding any other foreign exchange that they could get sanctioned on at any point in time. And then they're screwed.
So what are the policy level measures that a country like Pakistan needs to implement? Because as of now, you're not even allowed to legally trade Bitcoin or buy Bitcoin in Pakistan or any other crypto for that matter.
Well, I think that's part of the reason is because they think that their ecosystem is so fragile that if there's any departure of any kinds of capital from within their economy, it's going to absolutely handicap the economy. But what they're completely missing out on the other side is the boost that economy is going to gain from adopting these kind of digital modes of transaction, right? Not only is it going to, for countries like Pakistan, not only is it going to provide financial inclusion, where the friend that I was telling you about at the start of the call, who was doubled his PKR salary over the last 5 years, but is making half the amount in USDC, if he could have access to Bitcoin or cryptocurrencies as a hedge, I'm not saying put all of it in it, but even if he put 20% of his income into it, he would have an increased spending power compared to the rest of the population that hadn't invested in these kinds of currencies. Then Pakistan's one of those countries where a vast majority of the population is actually unbanked, right? And they don't actually meet minimum criteria to be banked. Right?
I think actually only 3% of the people are like bank or with formal institutions, or even less.
Right. So, and these people fall prey to predatory loans, predatory financial arrangements, outright fraud, where they'll just take your money and tell you to pound sand, right? If I could custody my own money, even in PKR, even if you wanted to create a PKR coin, right? That's still perfectly fine. That allows these people to not be stuffing their mattresses and be at a risk of robbery or at a risk of fraud and Ponzi schemes, right? Where right now there's even, and it's kind of sad to admit, even someone in my extended family got done by a Ponzi scheme recently in Pakistan, right? All the money floated over to Dubai and it's impossible to track because it was all in cash. Well, if it was in PKR coin, we know exactly how much was spent where and who has how much and how much is recoverable. And it's much easier to follow those cases at that point in time. Right? Then remittance, which is a big source of income for a large population of Pakistani families with, their counterparts or members of the families overseas that are sending back monthly stipends. All of that is we're being charged an excessive amount in Pakistan. Like it's actually obscene. I get charged 2 to 3x more to send dollars to Pakistan and then get bashed on the exchange rate compared to me sending money to Australia or Europe or any other first world country. That's ridiculous because even JP Morgan internally settling between HSBC and Chase here in the United States, they now use Ripple in the background to settle it. And now your settlement costs are under $5, whereas they used to be $35 less than a year ago. So that is something that even if Pakistan didn't adopt it on a government but even aligned remittances, which you can mandate being converted into PKR coin. That's perfectly fine.
So basically, even if you open avenues for transaction, that's enough at the micro level that will allow people to make the most of, whatever opportunity these crypto modes of transaction have to offer.
Right. And then you've got blockchain-based land registries, which we already spoke about. That just completely gets rid of the party. The file system is obscene in Pakistan. I've seen my own dad struggle with it. And I didn't used to get it as a kid. It's like, what do you mean you have a file? What do you mean you're going to get a plot at some point in the future? Just paying money in. What if it's facing a graveyard? It's like, well, then it's facing a graveyard. Right. So all of those things go away. And there's a level of transparency that gets introduced into our framework. Right. The problem with Eden Villas wouldn't probably have happened, or it would have caught a lot earlier if it was all on chain. Right. So all of these inefficient bureaucracies, which honestly are partly by design.
I think so too. Yeah. I think there's a deliberate need to maintain that status quo. And that's only been done when, there's all these even non-financial transactions are made in paper form that are not digitalized. Because the more you digitalize, there's lesser room for corruption or for maneuvering around these transactions that happen.
Right. And then, like we mentioned earlier, micro lending is massive. Like if I have everyone on a digital identity, I know this guy, he has a Golgappa stand on Link Road, right? He makes 20,000 rupees a month, right? If he wants another 10,000 rupees to expand his operations to a second stall, he's not getting that money from anywhere except for hard money loans, which are sometimes charging interest rate upwards of 60 to 70%. And they're all gangsters. Like there's no legitimate hard money lender.
Yeah. So one more thing. So you've been in the field and you know the sector well enough. Do you think Pakistan at its current stage of evolution has the right level of digital infrastructure that it can adopt this technology?
Absolutely. Everyone's got a mobile phone. That's all we need. That's fundamentally all we really need to facilitate these transactions. And Pakistan would be doing most of its transactions as layer 2, right? Ethereum is more so layer 1, where you've got other cheaper layer 2s that sit on top of Ethereum that get settled with Ethereum. It's almost like, think of it as 2 different layers, but this is the cheap layer to transact on for smaller transaction sizes. And they get rolled into Ethereum on a 24-hour, 10-hour, 1-hour basis, right? And those transactions cost less than a cent. Right. So those would actually be cheaper for Pakistanis to do than what they're doing today with Easy Pesa even. Right. So if we have fundamentally the infrastructure to support all of this. Right. If El Salvador can do it, so can we.
Right. Yeah. No, exactly. Yeah, there you go. So, all right. So now the big question, or I think a question that a lot of people would be wondering, to get your insight on. Given that obviously I think you have 99% more knowledge than anyone else would have on the topic. So the halving is expected to take place sometime this
15
month
days.
in April.
15 days.
15 days away?
Days, depending on block size. Let me actually look it up. BTC, because it updates every block depending on how many transactions. April 20th. So 15 days.
15 days, yeah. So it's happening in 15 days. So after the halving happens, what do you think the value of Bitcoin will go or will peak at within the next 4-year cycle?
So again,
not
financial advice.
Yeah. Exactly. I mean, let's like there's no you won't be sued.
But going based on historical data and based on the activity that we're seeing with the amount of inflowing to ETFs happening right now, there's something called the stock to flow model for Bitcoin. Right. And I can maybe pull it up and share an image of that with the team here. BTC stock to flow. So what the stock to flow model actually predicts is what the price of Bitcoin is going to be over the next halving period. And it's actually quite accurately predicted historical prices based on the supply shock that was going to be occurring. So if you guys can see my screen here. Yeah. So if you can see, here are the blue dots. The blue dots signify the days until halving. And then the red dots signify immediately post halving, right? So if you actually look at the halving timelines, it follows the trend line really, really well. Does it overshoot during the euphoria phase? Of course it does, right? But before I actually start explaining the Bitcoin stock to flow model, first I want to explain to you what the fair market value of Bitcoin today is and what it's going to be post-halving. So today, to mine one Bitcoin, it will cost you around $20,000 to $30,000, depending on your cost of electricity. Assuming a cost of electricity of 6 cents, assuming a Bitcoin miner price, which was the previous generation, because the new generation of miners just came out, assuming you were working with S19 Pros and using previous generation of miners, it cost you $10,000 to buy the miner, another $20,000 in equipment costs, overhead costs, and you will have a Bitcoin for between $22,000 to $30,000. So as long as you were buying Bitcoin as close to that price, you're paying the fair market value. Will it dip below fair market value for a little bit of time? Sure. But usually every single time it dipped below fair market value, there's been a V-shaped recovery at the next support level, and it's always turned that resistance into support. Now, Bitcoin price was $22,000 right now. Now that the halving is going to happen, it's between $44,000 to $50,000 for the fair market value of Bitcoin. But every single halving previously, the fair market value of Bitcoin has been eclipsed by anywhere between 1.8 to 3x. What the fair market value should be. Like the fair market value when it was 6 grand, we hit 20K. When fair market value 20 grand, we hit 60K, right? There's slight diminishing returns there. But if we are to actually look at the price and kind of achieve a similar multiplier, I assume safely Bitcoin would go to anywhere between 120. That would be the normal value of Bitcoin during a bull run. It's going to fluctuate around that. It's going to go euphoric, maybe close to 160 to 190, right? But at that point, you should be scaling out, right? This advice would be true as of last year. Now I am not certain, because now you have BlackRock and GBTC and Fidelity Trust that are essentially a black hole for Bitcoins. These are ETFs that are acquiring Bitcoin, taking them out of circulation, trading the ETF against them, and this Bitcoin will never enter the supply chain again because it's being traded using the ETF now. So you've drastically reduced. I think we took out about 600,000 Bitcoin out of a supply of 17 million, and they're buying every day. And this happened over the last month and a half, right? So if they continue at this pace, Larry Fink, who's the CEO of BlackRock, has himself said, I'm going to buy all the supply of Bitcoin. Screw you. It's for me, not for the little plebs. Right. So assuming that there are some predictions that it might go in the mid to high triple figures. Now, will Bitcoin be close to $1 million over the next 10 years to 20 years, as long as quantum computing doesn't wreck it? And we have quantum computing tolerances baked into it, which I'm sure our good old boy Larry's thought about it. But will it hit that price? Yes. But between now and $1 million, will it also come down to 50 and possibly even below that? Very possible, depending on if we get into the only scenario that black hole of ETFs opens up is if we go into a proper recession, right? Where big, massive funds have to liquidate their holdings in order to stay solvent. That's a black swan event that I'm possibly expecting, and have some dry powder on the side to buy. But safely, I would say it's going to hit 100. Like there's no doubt about that. 120 to 130 is like almost programmed. Anything above that is risky. I would deter people from buying it at anything above that price. When my last Bitcoin exit was when I was sitting in an Uber and my Uber driver was telling me about Dogecoin and Shiba Inu. And I was literally sitting in the back, like, sell 75% of my portfolio. And I'm so glad I did, right? Because that was the tippy top when my granddad was like, hey, I was telling one of my friends that, my grandson is involved in crypto and he wants to talk to you, right? When you start getting those kinds of phone calls, that's when, the retail never makes money, man.
Yeah. So, and usually, I mean, based on historical records, what we've seen post-halving, it's about after 17 to 18
days.
18 to 17 to 18 months afterwards that, it really peaks and when it maximizes the bull run. Is that correct?
Correct. That has been historically correct. But usually if you go and look at the stock to flow model again, you'll actually see that usually the bull run doesn't start before the halving. This is the first time since 2012 or 2011 that it started pre-halving.
Pre-halving,
Yeah, because
because is there gonna be some market or like course correction?
I hope so, because I want to buy more. Right? But I wouldn't bet against it. Again, if it comes down to 50,000 to 60,000 range, I'll buy more, right? Even at 60, your risk of downside is about 20%, right? It really depends on what kind of investor, what kind of horizon you're investing on. If you're investing in saying, Ubair, I need money in 3 months, should I invest in Bitcoin? I said, probably not. There's a lot of volatility. There's a big risk. If you are saying, hey, Ubair, I want to invest in a 5 to 10 year frame, or I'm going to open up a college fund for my kid, we like buy one Bitcoin, throw it in there, don't look at it. Like,
that's actually a great point, because I was just going to come to it next. In the long term, is it like a safe investment to make?
Yes.
And is going in right now when it's about $66,000 at the moment? Is it, from a long-term perspective?
So if you're getting a 66K Bitcoin, and I had this exact conversation with my dad when he was like, well, the fair price is 20 grand. Why don't I just like mine for 20 grand and you help me set it up? And I'm like, God, it's like too much of a pain. You're not going to be able to maintain it. Shit's going to go down, and it's
just like people buy gold, right? They go to a jeweler, they buy gold. They don't go there and dig it up themselves and refine it and make it and craft it.
Right. So he's like, well, if it's 4 grand above, then we're going to get 25% extra. I'm like, are you going to sell it in the next 2 years? No. Okay. When are you going to sell it? Well, you can use it. I can use it to get some property in 5 years. Maybe we'll see. Like, then just throw it at 25 grand, continue buying to 30 grand, because you know what? Today he doesn't really care, because now 70 grand. Does he care? He overpaid by 5 grand for Bitcoin. No. Similar to this, today, if you overpay by 6 grand, are you going to care in 5 years or 10 years?
No. And what about Ethereum?
Same thing with Ethereum, but Ethereum has more competition, right? So there's that.
So what's the expected value? How high is it, like, in your estimate? Can it go up to?
I'd say comfortably 8K.
Right. Usually we see the movements are pretty much in tandem. When we see Bitcoin go up, almost all the other crypto as well as the altcoins go up as well.
Okay. Sorry, 1 second. Yeah. So what's so it has to do with something called Bitcoin dominance, right? So if you go to TradingView, you can look at a chart called BTCD. What does Bitcoin dominance signify? Bitcoin dominance signifies the total market cap of Bitcoin as the percentage of the total market cap of all cryptocurrencies, right? So when Bitcoin dominance rises, that means money is flowing out of cryptocurrencies into Bitcoin, because people are like, holy crap, Ethereum's sitting at 2,000. It went from 1,000 to maybe 2,800, but it's ramping up from Bitcoin's gone from 16 to 60 in the same time. So they're going to sell off these assets and put it into the other currency, right? Then when Bitcoin dominance peaks, it's usually around 60 to 70%, and it falters and Bitcoin kind of does a blow off top and then kind of settles into a groove. That's when the altcoins run, right? And at that time, you'll see BTCD falling. So keep a portion of your portfolio in Bitcoin. It's 60% in Bitcoin, 40% in everything else, because you never know whether you might miss the boat on any of them, right? But then as soon as Bitcoin dominance has peaked and you've hit your Bitcoin target, you rotate into alts, and then you rotate into fiat, right? And then you wait for Bitcoin to crash again to start the cycle all over. Again, this is valid as of last year before BlackRock came in. I don't know what happens now.
Yeah. So basically, the key takeaway for everyone who's tuned in is that don't hold Uber, or don't hold me accountable for it. But 66 is a good price to go in if you're going in for the longer run. Right. And it really depends how you time in and how you time out. And the 120, 130 is the fair expected value post halving within the next cycle. Awesome. Correct. Perfect. And how about Ethereum? Is Ethereum a good buy at 3,200 at which it is right now, or
there might be a dip coming, right? So just cost average. Hey,
okay.
I'm gonna run
Awesome.
I'm just getting like blown up.
No. I think we had a wonderful discussion, and it was like super entertaining and super insightful too at the same time. And thank you so much for your time, Ubair. It was great having you.
To hop on post halving as well and kind of give a market analysis at that point if you guys like.
Awesome. All right. Good luck.
All right. Thanks, matey. Bye-bye.